Okay, I think we're live.
Happy days.
Luke, can you hear me?
Yes.
Nice. Loving the setup at the back there.
Yeah, it's taken. Took me about a week to put it together. Oh, my hat's all dirty. Put me about a week to get together. So it was a mission, but it's been worth it to sort of find a nice space to get all your stuff together and reduce a bit of mess and all that kind of stuff. So it's been it's been a bit of a mission, but thankfully here we are.
Yeah, and awesome. And I've seen your content that you're putting out on YouTube on Blocksiders. It looks great, and some really in-depth content on some projects out there.
Yeah, I'm gonna do another one on Ample Fourth soon, because that's an interest. Sorry,
that's a hot one.
Yeah, well, I mean, it's been an interesting story for people, and I think it's one of those ones where people didn't really understand what it was meant to be, how it was meant to work, or even sort of, as a concept, what it is. And so, people that were buying this thing at like $3 or $4 were just FOMOing into something they didn't understand. And then obviously because the token was oversupplied, when it rebalanced, it would print more, so all the token holders would get even more. So it just seemed like this magical money earning machine up until about the 12th of July, and then it just started to dump on the 12th and 13th, which is when the VCs got another unlock, and then they were just able to destroy it. So, and then people were watching the wallets of these early VCs, and they were just literally dumping out obscene amounts of it, and it ended up lowing on the 30th and 31st. I'll admit I took a little punt trade on it, and I didn't end up staying in. I was like, I'm only in this thing for an hour to see if it pumps, and it didn't. I got out at a very small loss, but other than that, though, it's been an interesting journey. But I think it's an interesting, because of the amount of volume that goes into it, and the amount of, I guess, publicity it's been getting, especially for a stable coin project. That I think a lot of people don't really understand how it's meant to work. I think it's an interesting one for a video, and just the way that rebalancing and the geyser and all that works. But we can chat about that a bit later.
Yeah, definitely. Yeah, it's very interesting. So let me do a quick thing for the first time. So welcome to the live stream. This is the weekly crypto update together with myself, Peter, from BlockchainSpace, and then Luke from Fortifex. So we've been doing this for some months now, especially through quarantine, and we're just trying to keep you guys up to date with what's happening in the crypto world, which is basically our day job. And there's so many developments, but like try and keep on top of what's major that's happening in the space, like especially with a highlight to what's happening in Asia. Luke, you want to add anything to that?
Yeah, I mean, what I think is been the most interesting development for me, because I've been pretty deep into the DeFi space over the past little while. But what I've been seeing, and I think this will affect Asia as well, because Asia has been quite or I guess it's been quite active in its legislation and the way it's trying to attract projects, and the way it's been trying to, I guess, put some laws around how this space works. The interesting thing now that's being developed in the DeFi space is that it has become, even because there's been so much legislation put on the exchanges, and now with the development of something like Uniswap, it's become even easier for both good and bad projects to list at zero fees. So it means you can list a project, like, you and I could create a smart contract and a project in about 30 minutes, and then we could have a token on Uniswap. And that's why we've seen a lot of really silly projects being listed. Like, there's one that was going apeshit today called Shiba, which is like it's off the Shiba Inu dog. It's basically meant to be a copy of Doge. and that's gone up. It's gone up in the order of about 12 to 13, 14x in a day. So if you got in this morning, a lot of people would be up minimum, 4 or 5x in a day, just high hair going off a pure meme, nothing. Like it's a literal pump and dump, but it's that the participants are, I think, getting involved in these things with very small numbers. Like no one's investing their life savings into this stuff, but as an experiment to see how it all works. Now, as these experiments continue, what will be really interesting to see is if any of these projects end up getting close to adoption. And if they do, it means that they've pretty much ultimately negated any legislation that's been done by any power. So the project doesn't, to raise investment, because it's completely decentralized, it's on something like Uniswap, which yet again is completely decentralized. You can't legislate it because it doesn't exist anywhere. You could say we're going to ban the website. It's like, well, someone will make a mirror. Like it's sort of like how BitTorrent, they tried to kick it and then it just never happened. And so what we're seeing now is that people are doing this with a lot of these good and bad projects, which means that a lot of for example, in Thailand, you need to pay, a bunch of money, roughly about $150,000 to have a project license there. Philippines is doing similar things, both the government and, the different special economic zones. Indonesia, similar story. Malaysia, heavily regulated their exchange market at the moment, and they've now got a secondary layer of, I guess, businesses that can list projects, which are separate from exchanges. So guys who are bringing projects to market, and this essentially cuts all that out, where it means that you don't necessarily need to, by listing on something like Uniswap, it essentially means that the legislation is out the window. Now, that being a legislator or a licensed project will give you more credibility. However, it sort of says, well, is that credibility worth $150,000 or, I think in the Philippines it's roughly about $100,000 to $50,000 to $100,000 to get licensed. Is all this really necessary? And also it means that you no longer need to list on a centralized exchange, which I have talked about in a previous. I think I talked about it in my interview with Charles Reed. Which has just been, it's all been put up over the past day or so. I might just put out the unedited full interview today. But that will pretty much show, we talked about how you don't need to pay a $5 million Binance listing, which is what it was during the boom in 2018. You don't need to be spending sort of investor money on buying or paying an exchange and giving them tokens to make liquidity and all this other stuff. You don't necessarily need to be doing anything like that anymore. So it means that you can have a smaller raise of, sub 5 million. You can pretty much get your product funded. You can get the tokens to market almost instantly. And you can start trading and away you go. And then you can start getting people using your network or whatever you're doing and spending your currency or however it's meant to work. And you don't need any of this crazy kind of like legwork that we used to need. So it's going to be really interesting to see how, this is globally, but specifically Southeast Asia, how the regulators are going to then try to step in and manage something like this. Because, the main reason why you don't want regulation, or why you want regulation, you don't want people just making tokens, is to stop people scamming. And I can get into the DEX issue, and I'll tell you a story about what happened to me this week a bit later.
Yeah.
But I think that it's going to be interesting to see how they're going to try to tackle this, and how they're going to tax it, and how they're going to try to do all these things, because the projects are all, let you have a look at where Comp's moving to be a decentralized autonomous organization. And how do you manage that? Like, there's nothing in place that talks about how that's going to be managed, especially in Southeast Asia, because this is something that's happening now, and these sort of government bodies have been putting regulation in place sort of 2018, 2019 for things that were being done in 2017. So I can't see any regulation coming out until next year or even the year after, especially about DAOs. It's already going to be 2 years down the line, and then people will be working on the next thing by then. So that I think is going to be the most interesting thing, to see how they tackle that.
This is such a big topic. let's save a bit of this for a bit later.
Okay, sure.
Because it actually kind of all ties in with what's happening in the crypto industry right now and why there's so much interest, kind of like what's kind of like pushing everything up. But yeah, for those that tune in regularly, you know, we do a couple of slides at the beginning. We like to go through any kind of like major developments in the region. And so as always, I've just kind of prepared a couple of slides here, and I'm just going to bring them up on the screen. Tell me if you can see that. You see that, Luke?
Yep.
Yeah. So I thought this one was particularly interesting. It was it's actually not the most recent news. It was actually released about 2-3 weeks ago. But since we haven't done a live stream for a couple of weeks, I thought we should actually get this one covered. And that's actually, so Swipe was acquired by Binance, and that was the second acquisition of Binance in 2020. And you know, and it's based in the Philippines. You know, so that's a major milestone for a Filipino-based company, especially operating in crypto, being acquired by, you know, one of the largest exchanges in the world by trading volume. It's huge, and I thought this is particularly interesting for people that are following kind of Asian news, to see that, you know, a Philippines-based crypto firm has actually made it to the mainstream and made it big. And then just to give some context kind of from what Swipe does, they're actually a issuer of crypto to fiat Visa debit cards. And they actually serve basically European customers, but with operations based in the UK and Estonia. But their main headquarters is actually, so they've got, I think most of their tech is basically running out of here. And I thought what was actually interesting, because I had a look at the white paper just briefly, and it's quite different to other debit card issuers, where other debit card issuers, what they do is they just partner with an exchange. The exchange does like so let's say when you go into a store and you want to pay with a crypto debit card, right? So other people that offer these debit cards, they just partner with an exchange. So when you go in the store, you make the transaction, they're charging you, let's say $10. Now that $10 then gets converted by the exchange and then gets debited from your crypto account. Now, what's different with Swipe is actually Swipe actually runs their own blockchain, and I didn't realize this, but that's actually pretty interesting. So Swipe, it's called the Swipe network, and it connects basically their wallets and so the cards together with smart contracts, which basically help to do the exchange themselves in a more kind of decentralized fashion. So it's always looking at it's the Swipe network, its own blockchain is kind of picking up on market data. It's picking up on like exchange rates, price feeds. It also provides liquidity for the transactions that actually happen. And obviously it has its own native token, which is called SXP. And so basically Swipe has that additional layer that other crypto debit card issuers, I don't think most of them actually have. Have you heard of any other crypto debit card issuers having their own blockchain?
The best one is actually a step better than that. And I've plugged it a few times. I think even when we did our talk a few weeks ago, when I plugged a number of projects that have gone pretty well, is Flexa. Flexa does that, but I probably think a little bit better. But I don't want to get into a plug for that project. So I'll just say recently, just give me 1 second. I just need to... I'm just going to have... So the biggest issue with a lot of these, and especially Binance, is that they're basically back in any other crypto credit card. Essentially, the issue is that they're backing into an existing framework that is supposed to be disrupted by blockchain. Now that's Visa and MasterCard. So if you're issuing a Visa or MasterCard product, you're essentially just backing into an existing network. So it doesn't necessarily make, other than great, the novelty of being able to pay for your, coffee with XYZ Bitcoin, you're still paying fees along the way. So you're paying not only exchange fees for the transaction, but then you'd also be paying a fee on the credit card as well, whether there's a blockchain in between or not. And then obviously, MasterCard and that are going to be taking their fee from the vendor. So the biggest, as far as how that supply chain works, so from merchant to swipe to Binance to the user, the biggest disruptable, player in that chain is between the merchant and Visa and MasterCard, because Visa and MasterCard, they have, they've got terminals all over the world. They've spent a lot of money doing that. That's not a problem. However, and you can spend money anywhere. That's fantastic. But as far as an innovation goes, by backing into those, very, very entrenched, dominant players in the market, you're not really innovating much. All you're doing is allowing, one step of the chain to be, made a bit easier. That step being crypto to fiat, and then fiat to bank account, and then bank account to credit card. You know what I mean? You're not making that process much easier. Whereas something like Flexar is actually building their own network that will compete with MasterCard and Visa. And then the value of the token in Flexar is that it is used to secure payments as the transaction time with whatever blockchain you're using is being fulfilled. So, for example, if you want to pay with Bitcoin, 10 minutes per block of transactions. No one's going to sit around for 10 minutes and wait for a confirmed block when they're buying, $5 worth of coffee. So therefore, it becomes unusable. Whereas with something like the Flexar network, the token acts as security while that 10-minute or 20-minute delay in between the purchase and then the blocks being written is sort of taking place. And then the collateral is basically used. The Flexar is used as that 30-minute short-term collateral to guarantee that the transaction will take place while the blockchain is doing whatever it's doing. Means that through the app you can make the payment and then walk away, and the vendor knows they've got their money, and then the person who's paid knows that they've guaranteed that payment, and then the token handles that in between block period. For me, that's a better innovation, and this isn't a plug, for the project. I'm just talking about my issue with the way that a lot of players are trying to solve that crypto to fiat problem. And the thing is that they're attacking, you could say it's the low-hanging fruit, sure, but they're not really attacking the big problem, which is people needing to back into these major houses like Visa and MasterCard, which are ripe for disruption. So if you really want to have a look at someone who's doing, in my opinion, and for what that's worth, something that is both innovative and is going to do really, really good things, assuming that the project gets off the ground, they're going to be able to achieve a lot more. Like, they're going to actually be able to disrupt significantly and create significantly more value for not only users, but also not only users, because it means that you'll be paying less fees when you're converting into crypto and all that kind of stuff. It's going to be a lot easier, but the merchants won't need, the fees to the merchants are significantly cheaper through a network like that as well, because you haven't got this overwhelming bloat to be paid for in something like a Visa or MasterCard, because they've got, tens of thousands of employees all around the world. They've got this massive amount of infrastructure, which can actually be, for the most part, taken away by the use of something like blockchain. So that's my big spiel on that. Is that I've got an issue. It's cool that people are doing this stuff, but essentially it's just pretty much, it just adds the way that it's currently being done by players like Binance by using this. Essentially, it's just more people clipping the ticket. As it's more people clipping the ticket along the chain, whereas. Yeah.
Don't you think it's basically the first step towards getting people to, using crypto as basically an everyday currency, right? And so you give.
Yeah, but the issue is this: we still don't have. With maybe the exception being something like a USDT or a USDC or whichever USD backed currency you want to pick, because they're all, there's conspiracy theories against all of them.
Yeah.
It really means that other than those, there really is no, and people might say, oh, but this blah, 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 obscure currency. There's no currency that is currently widely circulated that is stable enough to have that capacity. All the majorly used currencies, even stuff in the top 10, with the exception of like actual stable coins that are widely used, like USDC and USDT and things like that, are not stable enough to be used as a payment methodology. I mean, at the end of the day, I mean, if you were to check even Bitcoin, I mean, Bitcoin's moved 20% in the last week. I mean, that cannot, how would you feel if you bought your coffee and then realized it was 20% more expensive than, after, then you could have held it and you would have been able to buy 1.2 coffees. It's insanity. So I think that
that's a great.
Yeah, you got to cut me off,
great
otherwise I keep talking. So yeah, keep going.
That's a great prelude actually to the next topic that we're going to be covering. But I mean, in my opinion, these crypto debit cards have to. I mean, there's something that people deem as kind of like very familiar. It feels safe if it has, especially like the Visa emblem. I mean, it's something that they've grown up with and people have known to trust, and trust is basically, the key.
Yeah, but if you're in crypto, I've got to say that, I mean, if you're involved in the crypto space at this stage and you're still here after being there in 2017 and 18, I'll be honest, you're still a risk taker. and having something backed up by Visa or MasterCard, I mean, it doesn't really fit the psychological profile of someone who is a risk taker. I would say that would be closer to people who are, say, in adoption, people who want to say, if you want it to be adoption, then yes. If you want to get it into the mainstream, of course, it needs that kind of backing, sure. But I'll be honest, I mean, the people that are holding cryptocurrency and want to use it for payments are not those people.
Mm-hmm. Well, I mean, there's another thing, right? Sorry, Luke, you still there?
Yeah.
Yeah. So the other thing is, like, I mean, someone like myself, I've been considering using the crypto debit card as like, the main basically debit card. And for me, what I'm thinking is, the bank accounts here in the Philippines, they don't really pay much interest. Whereas, you start using these kind of products and you're basically automatically linked to all the crypto, basically financial instruments that are out there. So you've got, your savings tools, you've got yield farming instruments, and, all of your crypto assets basically could be working whilst you're actually, and still you have access to be able to actually spend those on a daily basis. And I thought that's quite interesting.
Yeah, I mean, it would be. I mean, the argument would be if you were, a very, very, if you're a very, very hardcore yield farmer and you wanted to budget yourself to only spend what you've yielded for the day or something, sure. But I think that if you want to create efficiencies,
like innovation, right?
But that, I mean, unfortunately, that product doesn't exist. But I think that yet again, that it is far better to. I mean, if you want to have a look at introducing systems that are going to really, really change and have an impact, I think that using a back-end legacy system, and people whinge, not whinge, but people complain that the banks are, a big problem in the world of finance because of fractional reserve lending and all these different things. But then the main solution that we're looking at for payments in crypto is based on two organizations that have have been dominant players in that market for a very, very long period of time. Are probably ripe for absolute disruption, and yet there aren't many players trying to build a complete global blockchain network that can do payments. So I will also note that Flexer is only available for. I mean, to purchase the token, you can be anywhere, but to actually use their payments network, it's in the States, in the US and Canada, and I think they've already got 40 or 50,000 vendors, 41,300 locations in the US and Canada. that can use this thing. So there's a number there, and that includes Starbucks, and they've gone to major players, and then there's more coming up and things like that. And the reason why the vendors like it is because the fees are significantly lower than what they would pay with Visa or MasterCard. So, I mean, as far as, this is not going to be a project, for example, that is going to just happen in the next few years, where it's going to go global and people are going to start using it. I mean, it's going to take time. But the thing is that you need to start building it now so that in 10 years, when crypto is more mainstream, that network is ready to be used. Right, so that's the view that I have with something like that.
Yeah, it's definitely a long slug, and it's it will take some time.
And that obviously implies risk. So I'm not necessarily saying that this project is going to succeed. I'm not saying that it's going to go and become a multi-billion-dollar thing that's going to take out Visa and MasterCard. But at the moment, they're the guys who are actually building a blockchain network to handle payments that is meant to supersede Visa and MasterCard. And so we'll see how it works out.
Hey, question.
Could be like the electric car.
Are these guys regulated in the US already?
Well, they would have to be in some way, shape, or form because they're operating in the US. So I would probably say 100%. And they're not a DAO or anything like that. They're a proper, they did a proper ICO, and they went through all the old stuff probably a couple of years ago. So they would be regulated by the SEC because they're operating there, the US and Canada. They're actually taking payments now. I mean, like their application is live and working. And so far they've done, I can't find it it's on their website somewhere, but they've done X many millions of dollars in payments and not a single fraudulent transaction to date.
Interesting.
So the other thing of vendors like is there's no chargebacks, there's no, because it's blockchain. And it also means that because the user has control of their crypto and you're not borrowing money from the bank to do it, there's no stealing your card. And obviously the verification process is a bit more robust than just holding a piece of plastic, because it's obviously done through your phone and all that kind of stuff. So yeah, it's so there's been no fraudulent transactions so far on the network.
Yeah, that's interesting. Yeah, it's very interesting.
So sorry to derail that and talk about this cool stuff and then talk about some other project that's doing cool stuff.
No problem at all. I mean, you said you're going to do a deep dive on Flexo in the future, right?
Yeah, there's a bit of stuff happening with them in the moment, so I've been holding off because I want to sort of do it after they've released all these different bits of. They're doing some things, and I just need to wait till that's done. But I'll probably release that. It'll be within the next month. But I'll probably do it after I'll probably start working on it after I've done the Ample one, which I'll release sometime this week.
Awesome, sounds good. Right, let's move on to the second topic before we run out of time. But let's see if that works. There we go. So that's what I was saying was perfect. Basically, what you were talking about, having a stable coin that could be widely adopted, and that's something that's kind of interesting. Again, it's following the trend here, but the Philippines is basically publicly declared that they're looking into basically the feasibility and the policy implications of launching a central bank digital currency, so a CBDC. And but the governor has actually made it very specifically stated actually that they more than just the currency itself, but they're actually more interested in the application of the technology and seeing how blockchain technology can actually help the central bank itself. But there's definitely a trend right now for central banks looking into digital currencies of their own. And as you mentioned, these stable coins are just kind of like popping up left, right, and center. And I guess the major one that has been on all kind of central banks radars is really Libra, and Libra is really opened up the eyes to everyone, knowing that you can see basically what the power and potential of what a stable coin could look like when it's mass used across the world, right? Any thoughts on that?
Well, I don't want to get stuck into a Libra debate, but I think yet again, as I alluded to in my first, I think my one concern with sort of central banks listing their own digital currency. I mean, I think it will be good for the industry because it'll sort of solve that stablecoin problem. It's going to be bad news for the stablecoin industry because they would be made instantly redundant. But I think that I think it will be interesting to see how it plays out. But I feel like the industry will be 2 years ahead of where the regulators and where the governments and things like that end up being by the time that they get it right. That's my only concern. Is that they'll be building on a chain that's going to be too slow, and we're already on version 4, or it won't. Certain applications. I mean, at the moment we're seeing layer 2 applications, which are applications that exist on top of the blockchain technology layer, and we could be on like 3 or 4 by then, and they're still going to be building on their own legacy, sort of layer 1, layer 2, and the new stuff that people are using might not be able to integrate with it. But I mean, who knows? We'll see what happens with that space. But I think that that is going to be interesting to see how these things affect the stablecoin industry.
I mean, do you feel that the private sector anyway?
Sorry?
Do you feel like the private sector is just going to go ahead and spearhead the stablecoin initiative anyway? I mean, there's nothing stopping me today from basically launching my own stablecoin equivalent on something like Uniswap.
There's not. And then it's that age-old thing that the thing that gives it value and the thing that makes it do what it does is your belief that it gives it value. Like Tether is still tethered. I mean, conspiracy theories aside, I mean, allegedly Tether only has 60%. It could be more, could be less, depending on what report you read. But they've got, they haven't got 100% reserves for every Tether that's out there. So it means that it should be valued at a discount, but it's not. It's valued at 1 to 1. And the reason why people do that is because they believe that they have a high certainty that it will still exist and that it will still be worth $1 in X many days, weeks, months that they're holding it. So for that reason, I think that stablecoins can work, but it requires that mass adoption and that almost communal understanding in the same way that Tether has done it, that communal understanding that this is $1. And we say, okay, this is $1 now, and we start using it. So whatever the mechanism behind it is, whether it's something like Ample with the elastic supply to try to keep prices at $1, whether it's Tether, which says we're just going to be worth $1, depending on how that works is going to it depends on what the biggest consensus of people decides. In the same way that fiat money has no real value, but we all give it value. Essentially, it's just going to be whatever stablecoin people say, oh, yeah, that's worth what it's worth. And then so long as the backing sounds sound enough for people to understand it and get how it works, if we all believe it's worth $1 or whatever we think it's going to be worth, or some unit of international currency, the global dollar, whatever we believe it's going to be worth is what we end up paying for it. So that's sort of what I think about the stablecoin space. But nothing is even remotely close to approaching the usability and the general industry acceptance of something like USDC, USDT, all these US dollar-backed stablecoins.
Yeah, that's true, man. They really have great traction. It's something that I really fail to do a lot is really engage with the audience, and I know there's a couple people who tune in right now. So, I mean, like Ian, Vanessa, Lance, if you guys have questions, let us know if you have any questions for us, and we're happy to answer questions on the fly. Sorry, Luke, are you there? Okay, I think Luke just had to take a call. But yeah, that's it's very interesting to see basically the Philippines following the footsteps of the big countries around the world, looking into basically CBDCs, so central bank digital currencies, and the Philippines has been actually a great initiator of kind of blockchain-based innovation, and it's as you can see, basically the main regulator in the country is already in the loop and looking into these technologies, and I think that's very promising. Right, Luke, I'm going to go into the the really interesting part of today's discussion. I think that's basically. Can you see the screen? Yep. And I'm pretty sure everyone is basically wondering what is going on here, right? So obviously, Bitcoin and Ethereum prices have just boomed in the last couple of weeks, and there is a ton of headline news coming out, basically that Bitcoin FOMO is back. Bitcoin blasts through like key resistances. Whilst at the same time, Ethereum fees are up by 550%. And then there's just a ton of very, very bullish sentiment out there. And so I've included a couple of interesting logos on that, Luke. And do you see one in particular that's a funny one?
You've got 3 there. So you've got that one there as well. Well done, retard token. That's a story in itself.
Yeah, exactly. So I thought I had to include that. Okay, guys. So I mean, like, it's definitely it's a very interesting time to be in crypto right now, and a lot of people are definitely making money. But you just have to be careful, and that's why I've included the logo for a token, which is basically, I think it was created as a joke. And it's called retard token, and the I'm not even going to tell you what the token symbol is, so don't even look it up. But basically, people are still buying into tokens, and as Luke and I mentioned earlier, tokens can be fabricated by anyone these days, and even Uniswap, the decentralized exchange, they warn that anyone can fabricate tokens, and that these tokens, they can even have the same names as other legitimate companies and projects out there. So you just really have to be so careful right now. Do you want to add to that, Luke?
Yeah, I'll tell you my story about the decentralized exchange thing. So, I mean, I guess I wasn't involved in the setup of Retard Token, but basically after Aleph sort of tanked, and all these people were really annoyed. Not Aleph, sorry, Ample token tanked. And then a lot of people started creating these anti-Ample meme tokens, like just pretty much anti-meme. And then there was, there's, I think someone's put it here. Yeah, there's YFII, which was another one. And then there was YFIII, and then there was another one. And then there was XAMP, and then XXAMP, and then XXAMP, XX, and then all these different things came up. And then then it was basically trying to, it was people then started to try to sort of, just as an experiment. That's how I viewed it, as an experiment to see what would happen. And so people made, and this was sort of, there was a bunch of different tokens that were made. This is over the past few days. Now, the thing that I learned, and I'll admit I bought Retard Token, but I'm also incredibly stupid at the same time. So Retard Token, it wasn't necessarily designed to be a scam. It was just designed to be a meme token as an experiment. And then you just see people get in and then out. And then the good thing about this particular token is that, liquidity is quite low, but that's because people are only investing, like I said, in these silly things. People only invest small amounts of money, so that the risk to loss is incredibly small. But you just basically get in just to see what happens. Now, the real careful thing about a lot of these tokens that came out, these anti-Ample tokens and, different things that happen, XAMP and, the YFII one, is that the people that create the tokens can actually make it so that you cannot sell it once it's been bought. So when one of the groups that I'm in was talking about this retard token, I was like, oh yeah, whatever, I'll just get in and see what happens, put half an ETH in, whatever. I actually got the wrong token address, and it was another retard token that was called anti-Ample fourth retard tendies token. And I was like, yeah, sure. So they're now in my wallet, thankfully. And then I tried to, and what my plan was because I was like, oh yeah, I'll support this little initiative. I'll just put a little bit of money in. It's not a big deal. So I bought half. And then I was like, I'll put half into liquidity on Uniswap. And then what that does, it means that other people can trade it. So providing liquidity gives you a little bit of benefit. It protects your downside risk. It also limits your upside, but then you earn trading fees. So it's a bit of a conservative option if you want to get into something. If you just want to test the water at the start and reduce your risk a bit. So I did that. I was like, whatever, I'll just do that. I think it's all gone now, by the way, so I'm not really worried about it. But for the other token, the X-Ample Retard Tendies token, I bought it and I tried to put liquidity in, and then it wouldn't let me. It kept saying no, no, no. And then I was like, okay, we'll see what happens. And then, basically I couldn't sell it. And then I looked at the contract on Uniswap, and it looked at there was only buys and no sells. And the token was moving up in price slowly as people were buying, but then no one could ever sell it. And it's because the contract's locked. So it means whoever made the contract is basically just eating all that ether. And then, then one day they'll unlock it, drain it, and then boom, and you're left with it. So it's an interesting one to play with, but it also shows how careful you've got to be when you're playing with these things. Because I mean, like when Plutus came out, there were like 8. If you did a search for Plutus coin, and that listed earlier this week, there were like 8 different contracts. So if you didn't have the right contract and you wanted to buy, you could have bought into one of these scams. And a lot of people are doing it on a lot of the bigger listings that are coming up on Uniswap. So probably DIA will have a lot because that's coming out on Uniswap. There's what else is coming up recently in the near future? There's a few actually, but I mean something like that would be something you'd want to be really, really careful about. DeFi Pi, which is a 50-50. Then there's I think there's also DIA, and then there'll be a bunch of them. There's a lot of them coming up, but essentially a lot of these big publicized projects that are listing on Uniswap, people create copycats and just prey on people being lazy or not paying much attention. Like myself, when I was buying the wrong. Now, thankfully, it was only half an ETH, and I was just like, whatever. Like it's been a good month for me, so half an ETH is not a big deal. So
that could be a lot for someone else.
Yeah, I know, but that's still $150 down the drain. That's gone. And enough people do that. 100 people do that. It's a good earn. So it also shows. I mean, the good thing is it shows flexibility on behalf of the industry. That if you're starting out, you can do a token raise. You can create an experimental project and just see how it plays out. You could create a DAO between your friends, and then allow people that share the same interest of you as you to get involved. I saw one today that was like, there's a very selective traders group, and the only way that you can get into it is by owning a certain number of tokens. And then if you own a number of tokens, you get in, and then you can follow the big whales that are involved in the group, and that's sort of how they derive value. So if you're a big trader and you're really, really big on your research, but you only want to share it with a limited group of people, you can list the token, get it out there, blah, blah, blah. And then it means that anyone that holds less than whatever the number is, let's call it 1 million tokens. You own less than 1 million tokens, you're out of the group. And then they do certain things with to incentivize people to hold and buy and blah, blah, blah.
So the loot tokens coming out next week, is it?
Yeah, definitely not. I would not personally put my name to anything involved in this space at the moment. But and that's not from my point is that I've been in this space for now coming on nearly 4 years, and even I make silly mistakes and buying the wrong stupid meme token that I just wanted to play with for a day. So I mean, even it just shows that it's not even I wouldn't call myself an expert, but even people who've been, I guess, rattled around by the industry a fair bit would a fair people that would be rattled around the industry, would be immune to these kind of things, but obviously not. Maybe I'm just a certain type of person that can't get it right, but it's easy to make these silly mistakes when you're not paying attention. As human beings, we're not paying attention all the time. So it just shows that if you are going to get in this space, you really need to be vigilant to making sure whatever you're buying the right thing. That just because the name comes up doesn't mean you've got the right thing. And then that there are certain things that people can do, particularly in the case of this thing where you can create a token that can't ever be sold. where you have that security on a centralized exchange. If you buy something on Binance, whether it's a good or a bad project, you can sell it because there's liquidity there to take it. So I think that if you're going to be playing in this space, you need to be extra careful, because sometimes you might be able to buy something and then not sell it. So, and then even tokens that you can sell, like I know that the YFIII one, essentially whoever made the token was providing the majority of the liquidity. The token ran up in price. Whoever basically was the guy who provided all liquidity pretty much removed all liquidity and sold, and just dumped the token back down on top of everyone else and took off with the money. So that can happen as well. So there is, although this, so I would look at to condense that rant down to be a little bit more concise. You've got to understand that this space is still experimental, especially with the Uniswap thing. It is a big experiment to see how things are going to work out, and then improvements will then be made in the future. But at the moment, we're still in that experimental phase. Now, you can earn, in some cases, the most amount of money by being in this experimental phase, but you are also subject to sometimes experiments that go bad. So it goes both ways. High risk, high reward, as with most things.
Yeah, that's a great way to look at it, actually. And we got some comments here actually from some of the viewers. Like Navi was saying, it's still the future, which is not far. It's absolutely true. I mean, like basically people are experimenting with this today, and no one's, you're not going to stop this. This is basically progress in the making. You've got Ian saying, you've got to be careful with impermanent loss as an LP. So I'm not quite sure if I understand that. If you're an LP, but there's definitely risks to using Uniswap, right? And then, Ash Eileen has not a great impression of Uniswap, saying it's garbage and there's no difference with Ether Delta, which is back in the day. But yeah, it's I also saw one of the big crypto influencers talking about Uniswap being it sounds like it's a university kind of like a coursework swap exchange program, with something that they built basically between students, and it sounds like it's basically built for college kids. Yeah, but yeah, Luke, did you want to go into some price action analysis?
It's not, I wouldn't call it crazy analysis, but yeah, I'll bring it up. Give me a second. I've just got to go to my second screen.
Okay, awesome.
So I've finally got I've had issues with my second screen this whole time. I finally got it worked out. And I'm just going to bring up the right window, application window, this one. So I'll be brief on this, but it should be, there it is there. A screen on that. I'm going to move this over to my old screen. So as you can see here, this is the chart of Ether, which has gone absolutely gangbusters at the moment. Now, this comes off probably quite a few things that's been happening in the industry in the wild. I mean, as we know, Bitcoin's gone a bit mental. And look, I'm not going to go into a technical analysis thing in the next 10 minutes because there are so many videos at the moment that are out there doing TA on Bitcoin and Ethereum and whatever. But the thing we've got to look at now is sort of this news that sort of has come out that's talking about Ethereum, where we have a look at sort of the ways in which transaction fees have sort of impacted us at the moment. Now, from where the normal rate is, other than, CryptoKitty kind of stuff and a few blips that we've had along the way, they are at an absolute value higher than they used to be. And anyone who's involved in anything in the space would know about this. So if we go to, I'll actually bring that over from another tab. If we go to something like ETH, ETH gas station, which I'll bring over now. And this shows us sort of the reason why we've had some of these really crazy price moves lately in the gas fees. Like doing transfers and interacting with contracts now, I'm spending upwards of $3 or $4 a transaction now. Now the main reason is actually Tether is number one, and that's because of the amount of traffic that goes through that. That probably isn't going to change anytime soon. If you have a look at the rest, two of them are basically looking at protocols that This is 1x Exchange and Uniswap, which is basically doing the decentralized transfers. And these are using a lot of Ethereum because you're interacting with smart contracts, as well as going wallet to wallet to do transfers. So it's quite expensive as opposed to a CEX. Now, CEX is a centralized exchange. I probably shouldn't call it that. But as a CEX, you're using a lot more gas, and there's a lot more transaction fees, because obviously when you're using a centralized exchange, any transactions that occur within the exchange are essentially off-chain, because all you're doing is moving numbers around in a centralized ledger. Whereas Uniswap is using the Ethereum network to provide those transactions on an open ledger. And so therefore, because of the amount of traffic that's going through Uniswap, it's going up. Now, the biggest concern is this one here, is that SmartWay Forsage is number one. They're using double the amount of transaction volume than Uniswap, and the amount of ETH spent is obscene. Now, for those of you who haven't seen my video on Forsage, it is not necessarily a scam, but it is dodgy, and I would suggest you take a look at that, because that sort of explains why. So what people are basically doing with Forsage is that they are, you're putting in your 0.5 ETH, and that's getting distributed around this pyramid scheme. It's all fun. But because of the amount of transactions, the amount of people get involved, despite the fact that the volumes are low, the amount of transactions is absolutely killing the network. So when people are there talking about, how expensive ETH is, and then having look at things like Uniswap and saying it's so expensive, and the use of smart contracts, the biggest culprit is this particular pyramid scheme, is Forsage. And this is on a 30-day moving average, so it's not like today's value or whatever, or live. Uniswap has been creeping up, so Uniswap is gaining more and more volume. However, still, Forsage has also been fairly significant. But it also shows you how many people have been fooled by the sales pitch for Forsage. Mm-hmm. So that is sort of where a lot of this sort of issue with the Ethereum volume getting smashed is. And then we're also seeing that the absolute dominance of basically DeFi coming up, and they've obviously, you have a look at dApps by blockchain network. It's pretty much nothing is being built anywhere else in comparison. Like Ethereum, 288,000 applications are being built. Now, I've done, talks about Ethereum pretty much all over Southeast Asia. And the one thing I always talk about is not only the fact that as a first mover, they get a massive advantage, but they've also got such strong partners and things like the Ethereum Enterprise Alliance, and the fact that it's so easy, and they've got one of the best education networks to help support people to develop on Ethereum, that being Consensus. They've done all the right things to basically become the dominant market player, whereas the other guys who are competing, obviously, Ethereum is very much open to utilization. EOS is a bit more specific. Steam and Hive are incredibly specific about what they're doing, whereas a lot of the others are they just don't have that weight behind them to educate people to build on that platform. And EOS haven't done themselves any favors by being a bit of a garbage network, and obviously, the way that it's sort of the way that launched, and the whole dramas around the delegated proof of stake that they use hasn't helped them either. And that's just my opinion of being garbage. I mean, when you're trying to do transfers on the EOS network versus the Ethereum network, as someone who invested a fair amount of EOS back in 2017 and then tried to then sell it, it was just, it wasn't difficult, but it was also like, why is this more complicated than it needs to be? It's silly, because you need to have EOS locked up in CPU and network and blah, blah, blah to do transactions. It's stupid. Whereas, rather than just paying, fees to then make a payment, it's stupid. Mm-hmm. So also, we've then obviously seen one of the issues with Ethereum, and probably a reason for the rise outside of speculation, is that we're then getting closer to Ethereum version 2.0 when we start moving towards Caspar, which is when it starts to move to proof of stake. Now, this will see transaction fees pretty much tank in a good way. Like they should go down, because we're going to see blocks being produced via proof of stake as opposed to via proof of work, meaning that miners will need to, it'll be less resource intensive for miners, but also it'll make, because blocks will be able to be produced faster. It means that more transactions can go through, meaning less fees per block. So that will be interesting to see how that works. So, but from a big perspective, and we've got the only thing I'll say to people is that from the hype that we saw when Ethereum was at $1,500, when you compare the utilization of Ethereum compared to then to now, it's gone up 50x or more. Like, I mean, I'm pulling that out off different things that I've read over the last few months. So take that with a grain of salt. The utilization of Ethereum is significantly higher in multiples compared to what it was back here. And yet the price is still down here in May 2019 levels is what we're crossing. So not investment advice, but I'd probably say one of the main beneficiaries of DeFi outside of the DeFi industry is the Ethereum network, because more people are using it, more applications are being used. And as people are doing more things like yield farming and needing to interact with all these smart contracts that are being done by these DeFi networks like Compound, balances obviously becoming very popular. And then the way that these circular transactions are working, all this is being done by smart contracts. So it means that these are fees that are always going to be used. So as a currency, it means that demand is increasing, which is obviously a very, 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 very good thing for price, because a lot of people, in order to interact with these contracts, will need to purchase Ethereum to then use it. And the thing is that this Ethereum is being used. So that's a fairly big positive. As far as we have a look at. But if you want a technical analysis video, I mean, it would be another 20 minutes, and I think we wouldn't talk about it. The only thing I will talk about, sorry, yeah?
Do you believe ETH is leading the charge, basically, in the main coin kind of like dominance rally? So I mean, like people have seen some speculation that ETH is basically leading BTC in building more interest in basically getting more capital into the markets.
Yeah, I think so. I mean, like, at the end of the day, I mean, the main reason why people use the internet is because of applications. People weren't using the internet for anything for the first couple of years other than being, nerds in their mum's basement. That was the meme, or not the meme, but that was the insinuation back then. So what we're seeing is that people can actually start using real applications to sort of exist in this network. Now, it's good and bad. The one good thing that, say, something like Forsage has done, it's encouraged people to go and buy Ethereum, start up a MetaMask, go get a Trust wallet, a whole bunch of other cool things that they've been able to do. But the one thing that obviously, the issue is that eventually that pyramid scheme will fall over. Well, it's a Ponzi basically, but whatever it will do will happen with it. And those stories never end well, by the way. Like, even if it's backed by a smart contract, there's probably something going on that will happen and it won't end well. The issue would be that people's first experience in interacting in cryptocurrency, blockchain, smart contracts is going to be with a Ponzi. So it's sort of like if your only experience in investing was being a client of Bernie Madoff, then you're probably not going to get investing in the stock market again. And that is a problem. That's the only problem I see for that.
Here in the Philippines, I mean, Forsage has already been declared a scam by the SEC. So
I mean, it hasn't stopped. I mean, I guarantee you, it hasn't stopped people from spruiking it. People will always try to work out a way to make money, and that's the other big issue: is that a lot of people are spruiking this stuff at the moment, and of course, everybody's bored at home doing COVID things, where we're sort of of course, we're all bored doing COVID things. It means that people are more susceptible to these kind of schemy things. So, yeah, a bit of an interesting one. So the last thing I'll end on is this is a basic chart of what we've seen with Ampleforth. So this is a stable coin. So what this coin is, what this coin does is it's designed to provide elastic supply. So meaning that it's basically designed to be pegged against the 2019 US dollar, meaning that is meant to be completely stable and not suffer from inflation. Now there's a number and they handle that in a number of different ways about calculating the inflation, blah blah blah. But essentially, how it works is that if the coin is valued at over $1, they use this thing called the geyser. Or rebasing is the big thing that they do. And basically what they do is they look at supply and then every day that it sits over a US dollar, they will, but you know, beside, you know, every day it sits over $1, it will, or an inflated dollar, I should say, it will increase supply, so that will encourage people to then sell that increased supply, which will then push down the price. What also happens is that people will, if it's under $1, it will cut supply, meaning that people will then need to buy it back up because it's cheap and it's worth, you know, it's lower than $1, and then they cut supply because it's not being used as much to keep it stable. So it uses what they call elastic supply, as opposed to Bitcoin and, you know, the US dollar. So Bitcoin has an inelastic supply because it doesn't move. The US dollar has an elastic supply, but it only moves in one direction, in that they only print more. They don't burn a bunch of it. So once it's out there, it never goes back. And the thing with Bitcoin is once it's minted, it's out there, it's done, limited supply, blah, blah, blah. So the idea behind this is that they keep supply elastic so as to, I guess, systemically manipulate the price back to $1. So what that means, you're holding here at $4, even if it goes back, you would have been benefiting from increased supply, because that supply gets dropped to everybody until it goes below $1, and then it gets burned by everybody. So this is compared to Ethereum. So just remember that for this block here, Ethereum has gone up, so therefore this would go down against it. But what you've seen, this would have been when it was at about $4. So you had a whole bunch of people buying in on this whole run up when it was over, and basically if they were staking in the geyser, it means that they would have been benefiting from an increased supply. So as supply is introduced via the geyser, these guys would have been thinking, oh my God, this is just printing money. Like I have, you know, $4, you know, I bought $10,000 worth, it's gone up to $20,000, and then every day I'm getting more and more free currency printed. How is this not a good thing? I'm going to invest more on the way up. And then what happened was a whole bunch of VCs that had invested in this thing at 35 cents decided $4 was a reasonable enough time to sell out. And so as their supply became available, they just dumped the shit out of it, which is entirely reasonable. I mean, if I'd bought something at 36 cents and it got to $4 and I had, you know, a couple of $1 million worth, probably more than a couple of million. I think some wallets were like 30 million. And it was unlocked supply, so they basically had their supply unlocked and they just dumped it, which is what they really. If I was a VC, I'd do the same thing. But essentially, what it did, it pushed it down, and then people then panic sold, and then everybody else panic sold, and now we're seeing a slight recovery. I think it's back to about $1.20 from about $4. But this has been a bit of a roller coaster ride, and a lot of people got involved and got burnt because they didn't understand about that mechanic. So whenever there's a negative rebase, it means that all this stuff that you bought here at $4. You're thinking you're going well and you're getting your positive rebases, but then it goes below $1. So not only have you lost investment money, so not only have you lost your initial, you know, your $4 has gone down to 60 cents. So you've lost roughly about more than 50, it would be about 70, 80% of your investment capital. But then if it's every day it stays below $1, supply gets burnt. So it means that your stack gets lower. So it means that not only have you made the investment loss, you also then, the amount of tokens you hold gets burned until it goes over again. Yeah, it's pretty cool.
Okay, I didn't understand that. Okay, that's interesting.
And so a lot of people don't, I mean, as with most things, people don't read the white paper. And yeah, that's how it's meant to work. So a lot of people got burned. And so, I mean, it didn't stay below $1 for long. I'll give it that. It only stayed there for like a day. And now it's at probably about $1.20, $1.30 or something. But it's it's a tough one. So it's something that people need to be aware of, that especially with a stable coin that's meant to be pegged to $1, when it gets to $4, there's only one way it's going. Like this thing should not, by definition, go to multiples of $1. It should stay between, even in its volatile period, it should stay between $1 to $2. Or 50 cents to $2. That's sort of the range it should fly at as a volatile stable coin until it absolutely stabilizes. But the biggest issue with this currency at the moment, if you've got all these venture capitalists and private sale investors that are getting these unlocks every month, and they're huge amounts of supply because they bought it because these guys don't invest, you don't invest less than $1 million if you're going in, to some of these deals. Some of these guys would have been investing millions at 34 cents. So they're already in a massive discount and they're getting unlocked every month, which means that they will they will need to continually dump on the market until they've reduced their supply down to a reasonable amount. Because if you've turned a $2 million investment into $8 or $9 million, I mean, you only have one option, and that is to start dumping, because there's no way you want to be holding. And then you've got a whole bunch of supply coming up in another month's time. You need to get rid of supply while the price is high. So this thing as an investment vehicle is probably not ideal. It's designed to be a transacted stablecoin, not designed to be an investment. So if people are trying to, I mean, you can make money on the swings. Don't get me wrong, like any trading thing, you can make money on the swings. But I mean, like the whole idea of this thing is it's not meant to go to $10. It's not going to go from $1 to. You're not going to get your 10x out of this. You're not going to get your 100x out of this. I mean, it's designed to be a stable coin, so you can hold it and hope that the price stays above $1, and you're going to get more and more supply, but because of the geyser. But I think the risk is just the opportunity risk of holding something like this is just not really there.
Yeah, definitely. Man, on that note, that's super insightful. Yeah, that was awesome. Thanks, Luke, for summarizing that. Actually, I didn't know any of that at all, and I didn't understand why the price was dropping like 80% in like the last week as well. But yeah, as Ian says here, people getting wrecked.
People have bots there, and there's also people just track the wallets, and they'll just watch the wallets of the major holders and just watch them happen, and boom, boom, boom. And the same thing happens. I mean, and I'm just going to declare, I mean, obviously I'm a big liker of Aleph, and I've talked about that in a number of different videos. That's gone really well. And so, I mean, as a project, it's gone pretty well from a price perspective, but you know, the way the liquidity works with the bonus is also quite attractive. But the thing about it is that what was going to say, the thing with a lot of these projects, I totally lost my train of thought talking about Aleph because you're talking about insights, but I can't remember now. There's really cool shit happening in this space, and but you've always got to be careful of what you're investing in. But I can't remember what my point was. Bugger. Anyway, sorry.
So anyway, we're running out of time. So you know, for the guys that are still tuned in, you know, drop us a line during the week, especially, or drop us a comment and let us know if you want us to cover something for next week, because there's so much stuff happening in the space. And like, obviously we're not going to cover it all, but I mean, for me personally, I found that deep dive on Ample already was so interesting. And you're right. I mean, like, most people don't have enough time or don't have the patience basically to read the white papers, or even like some white papers just go over people's heads, you know. So it's, you know, you really have to be careful out there.
Yeah, it is. But if anyone wants to check out when the video, I'll probably put it out this week. I'm just going to talk about the history and the technology, and the history so far of Ample, and then how the technology works. But if anyone wants to have a look at that, just go to Blocksiders. The channel name is Blocksiders on YouTube, and check that out, and that'll be there sometime this week. So subscribe and all those nice things, and you'll get a notification when that comes out. Shameless plug. I'm sorry.
And if you guys haven't subscribed to BlockchainSpace on YouTube, to also do the same. But you're going to see we're a partner channel, so you can do both at the same time. Two for the price of one. Okay, so have a great weekend. Enjoy your Saturday evenings, and we'll see you guys next week.
Cool.